My guest today on the spot is the famed publisher of the newsletter, the Gloom Boom and Doom Report. Dr. Marc Faber joins us on the line now. Dr. Faber, obviously so much has happened in the gold market since we last spoke. Yesterday, the metal hit a 6-week high, only to correct again this morning. So obviously, a lot of fluctuations here. What do you make of the volatility we're seeing with the metal, and can we expect it to hold above 1,200?
Well, as you know, that many market predictions of anyone have been massively wrong over the last few years. I mean, who would have thought that Italian, French, Spanish government bond yields would be lower than U.S. Treasury bond yields? We live in a world where some analysts think that there has been low volatility, but actually within the market there has been a lot of volatility. And we live in an environment where the main driving force of asset markets are central banks' money printing activity. And some people talk about currency wars. I don't believe for a minute that there is a currency war, because the central banks of the Western world, the Bank of England, the ECB, and the Federal Reserve, and then the BOJ, the Bank of Japan, they all talk to each other every day. They print money, and then after a while they pass on the baton to someone else and says, why don't you do something? They do, and then it goes back and forth. So any prediction is very difficult. But my sense is that we have today a very high level of confidence in the system, in financial markets. That's why yields are so low and stocks so elevated. Very high valuations in the U.S. and elsewhere as well. The valuations elsewhere are lower than in the U.S. And I believe one day this faith in paper money and in the power of central bankers will be undone. And at that stage, precious metals in physical form will perform very well. We've been at 1921 on the gold price in September 2011. We're now around 1,200. Well, I think it's a reasonably good entry point. I'm still buying gold, and I had a visitor who is very knowledgeable. He convinced me that maybe platinum is even more attractive.
So is it a key buying opportunity?
I don't want to say I buy now. I've owned gold since the mid-1990s, when it was trading around $300, and I buy every month some. And when there's a more significant decline, I mean, when there's significant weakness, I add more to my gold position.
So I just want to go back to your point about currency wars, which, as you note, a lot of people are talking about that we are in a so-called currency war. Now, what about the move by the Swiss National Bank earlier in the year? Wouldn't you say that was a move that really did surprise the market?
Well, they had to do it because otherwise they would have incurred even larger losses. The Swiss National Bank, just to show you the stupidity of central bankers, managed to lose within 4 years 6,000 Swiss francs for every man, woman, and child in Switzerland. That's quite an achievement.
Let's talk the Fed now. FOMC minutes coming out on Wednesday. Do you think that the Fed can even raise rates here given the current U.S. market conditions?
My view is, given the dollar strength and that most recent economic statistics in the U.S. have been on the weak side, I don't think the Fed has any intention whatsoever to increase rates. And if they do, at some point, it would be because some really visible inflationary pressures would come up. And at that point, they would increase rates, but they would make sure that rates stay below the cost of living increases. In other words, we would still have negative real interest rates.
So do you think then that they're just giving an illusion that they might want to raise rates in June or September?
I think June is off the table, quite frankly. The Fed always says they're data dependent. If I'm telling you I'm data dependent, it means I don't know. So they don't know either. They pretend as if they were the smartest people on earth, people that have never worked a day in their lives in the private sector. They're academics. They have no clue of what is going on in the world, but they will pretend to be so smart. Actually, personally, I don't believe that the Fed or Janet Yellen are really running the Fed. I think someone tells them what to do, but I don't know who it is.
All right, well, to wrap, let's talk about the U.S. dollar and those disappointing jobs numbers we saw last week. Can the strength of the U.S. dollar continue, and if so, for how long?
When oil was over $100, all the analysts, they thought it will stay there or go to $150 a barrel. Then it dropped to $40. And when the euro was around 150, 160, everybody thought that the euro would continue to strengthen. And what happened, it dropped to as low, I think the low was around 105, 106. And now everybody is bearish about the euro. But the fact is the Eurozone has already had significant adjustments. In Spain, wages have fallen. The cost of production has diminished. Asset prices have gone down significantly, and so forth and so on. So at this level of euro, US dollar exchange rate, Europe is actually quite cheap. And over the last 6 months, all I heard in the world is, oh, the US is the only game in town. And that made me very suspicious because the European markets on valuations were much lower than the US. And what has happened this year, most of the European markets, I'm not saying all, but say Germany, France, Italy, they're up something like 10% in dollar terms. I'm pointing out in dollar terms, whereas the S&P is flat. And I think 2015 will see a year where Europe outperforms the US massively.
Well, thanks so much for speaking with us today, Dr. Faber.
Yeah, my pleasure. Bye-bye.
And thanks for watching this edition of On the Spot. We'll see you tomorrow.